everyone, and welcome to Ignitis Group results call for the first half year of 2022. As every quarter, Ignitis Group CEO Darius Maikštėnas, together with CFO Jonas Rimavičius, will present you the highlights of the group development so far. Meanwhile, our Investor Relations Officer at Ignitis Group will moderate a Q&A session, which we will have shortly after the management presentation. With that, Darius Maikštėnas, handing over to you.
Good afternoon, everyone, and thank you for joining us at our results call. The first half of this year is marked with a strong green generation performance and challenges related to increase in net working capital. In the first half of 2022, our year-on-year adjusted EBITDA grew to 206.5 million euros. The increase was primarily driven by green generation segment performance due to the launch of Pomerania wind farm in Poland and better results of our operating assets. As a result, the segment adjusted EBITDA accounted for almost 60% of the group total result. However, adjusted EBITDA was partially offset by customers and solutions losses of 4.7 million euros as a result of electricity-related activities, including ineffective proxy hedges. However, following the higher than expected green generation performance, we expect our 2022 adjusted EBITDA to be in range of 360 to 420 million euros. Having a strong backbone of increasing renewable results, it allows us to continue committing to our dividend policy. Thus, we propose to pay 62.4 euro cents dividend per share for the first half of 2022. Moving on to the challenges this year so far. Due to the extreme situation in the energy markets, customers and solutions segment is mostly affected as a result of difference between tariffs set and the power market prices, so to say regulatory differences, as well as suspension of natural gas purchases from Gazprom, its replacement with LNG cargos since the beginning of April 2022. In H1 2022, the group's net working capital amounted to 812.5 million euros, which demonstrated a significant increase of 326.1 million euros since the end of 2021. It was primarily funded by concluding credit line agreements with banks with a total limit of around 500 million euros. It all resulted in negative free cash flow of 247.2 million euros and net debt increased to 1.2 billion euros since the end of 2021. However, we do not foresee any changes in the commitments to our customers, as well as we maintain financial stability, which is supported by S&P affirmation of credit rating BBB+ with the stable outlook this June. Finally, to continue on this path and to ensure further green generation growth, we successfully continued green generation expansion. Driven by greenfield project additions, our pipeline increased by around 750 megawatts in 2022 so far. Let me now cover the developments of green generation portfolio, as it is the key driver of our increasing results now and in the future. As mentioned in our performance highlights, we increased renewables pipeline by around 750 megawatts, mainly because of capacity additions to our greenfield development projects. Also, we reached significant milestones in our project development. Our Silesia wind farm of 50 megawatts in Poland reached the construction phase. We started development of first hybrid solar park in Lithuania, Tauragės solar project with the capacity of 22. Other than that, Moray West offshore wind project, in which we hold a minority stake of 5%, should reach final development steps in the coming months. On the project-by-project basis, we continued construction and development of our existing assets with no deviations in key milestones of the projects since Q1 2022. So we are well positioned to reach our 4 gigawatts renewable capacity target by 2030. Now let's move on each of the business segment performance over the first half of the year. On the green generation performance, its growth was mainly driven by launch of Pomerania wind farm in Poland and better performance of operating assets. As a result, segment's year-on-year adjusted EBITDA increased by around 235% and reached 119.4 million euros. With regards new installed capacity, portfolio increased by 95 megawatts, which also led to green electricity generation net levels increased by almost 27%. Finally, our investments increased by around 38% as a result of high investments in Vilnius HP biomass unit. However, it's still at the lower level as the new projects have not yet reached a heavy investment phase. Turning to networks, the segment's year-on-year adjusted EBITDA increased by 4.7% to 82.6 million euros. The growth was driven by introduction of additional tariff component in the new regulatory period, which started this year. In line with Network's 10-year investment plan, we continued our investments in maintenance and expansion of electricity grid, which were higher by almost 80% compared to the same period of the last year. The result of higher level of new connections and upgrades, as well as increased contractors' fees. In line with the schedule, after first batch of smart meters was received and tested in the first quarter, we installed them in the second quarter of the year, which was followed by the mass rollout kickoff shortly afterwards. Our target to finalize the mass rollout process by the end of 2025 remains unchanged. On the operational metric side, we continue to capture decrease in distributed volumes, mainly influenced by fall in distributed natural gas volumes as a result of warmer winter. However, we did not avoid extreme weather conditions, natural disasters, as well as strong winds and storms, which negatively affect our quality indicator SAIFI. Despite that, our SID indicator improved as a result of increased number in installed automatic solutions and staff management based on weather forecast. Opposite to growth captured in our green generation and network business segments, flexible generation results decreased. Similarly to the first quarter of 2022, it was the result of lower levels of commercial activities due to the less favorable market conditions. It in turn led to a year-on-year adjusted EBITDA decrease by around 51% to 8.2 million euros and a material drop of around 83% in the net volumes generated. Also, we already mentioned it in our earnings call of the first quarter results, but again, let me remind you that considering our current geopolitical uncertainty, natural gas reserve of 1.1 terawatt-hour was being acquired. It caused a temporary increase in working capital level. However, the regulatory mechanism is ensuring that compensation for this transaction, including additional costs, are compensated through isolated regime services tariff. Similarly, a negative result was captured in our customers and solution business segment. It was mainly due to the negative electricity result due to ineffective proxy hedging. However, it was partially offset by a temporary effect from natural gas inventory and one-off gain from natural gas mark-to-market positions. As a result, this segment year-on-year adjusted EBITDA decreased to the negative level. Also, extreme situation in commodities market led to a further net working capital increase by a total of 226.9 million euros, mainly due to high natural gas inventory value and increase in temporary regulatory differences. Purchases of unscheduled LNG cargoes as we no longer acquire natural gas from Gazprom. In first half of 2022, Lithuanian Parliament amended legislation related to providing customers with partial compensation of increased energy prices. From 1st of July 2022, increasing prices as well as the regulatory differences of regulated supply customer accumulated by the end of the first half of 2022 will be partially compensated directly from the state budget through a tariff. Out of the planned 570 million euros to be allocated from the budget, 365 million euros will be used to compensate the regulatory differences accumulated by 1st of July 2022. Another 205 million euros will be allocated to compensate energy prices in the second half of 2022 for customers of all independent suppliers, including Ignitis. All those measures have a positive effect on group's working capital and debt level. With this, I hand over to cover financial performance to Jonas.
Okay, so we delivered strong financial results in the first half of 2022. Our adjusted EBITDA grew by 38.8% and reached 206.5 million euros. Green generation segment again was the largest contributor to the growth and increased more than 3 times, reaching 119.4 million euros in the first half of 2022. The main drivers behind this growth were launch of Pomerania wind farm in Poland and better operating assets results, mainly due to higher electricity market prices. If you missed our first quarter earnings call, let me remind you that for Pomerania wind farm, we managed to reschedule the full entry into CFD support scheme and will be selling substantial proportion of electricity generated on a merchant basis for years 2022 and 2023, which will deliver substantially better than expected result. Moving on to the network segment, we recorded a minor adjusted EBITDA increase year-on-year, mainly due to newly introduced additional tariff component, and this component has offset lower electricity WACC and lower share of allowed return earned in the first half of 2022 due to a temporary volume effect. In our complementary business segments, customers and solutions and flexible generation, we witnessed adjusted EBITDA decrease. In customers and solutions segment, we suffered a loss of 4.7 million euros as the correlation of chosen hedge products deteriorated. Flexible generation result decreased more than twice compared to the same period last year due to lower levels of commercial volumes generated because of high natural gas prices. Moving on to the return metrics, our adjusted return on capital employed, return on equity, and net profit all increased, driven by growth in adjusted EBITDA. Adjusted return on capital employed increased to 9%. Adjusted net profit reached 107.9 million euros, and adjusted ROE increased to 10.5%. Turning to investments, our capex grew by almost 70% compared to the first half of 2021 and reached 129.4 million euros. The increase was mainly driven by the network segment as a result of higher investments in electricity network due to both a higher volume of works performed as well as increased contractor fees. Next, our net working capital and free cash flow figures. On the left side of the slide, you can see that our net working capital has increased by more than 300 million euros compared to the end of 2021, mainly due to higher energy prices, as well as replacement of natural gas purchases from Gazprom by LNG cargoes. These two factors led to a higher natural gas inventory, which increased by almost 200 million euros, and increase in customers and solutions regulatory debt by 171 million euros due to the difference of energy prices included in regulated customer tariffs and the actual market prices. On the right side of the slide, you can see that our free cash flow was negative and amounted to minus 247.2 million euros, which was primarily caused by an increase in net working capital, which I have just presented. Finally, the leverage metrics. As a result of increase in net working capital, our net debt has increased as well by almost 200 million euros since the end of 2021 and reached almost 1.2 billion euros. Net working capital increase has been partly offset by higher FFO and receivable received from FSOG in relation to sold electricity transmission assets back in 2011. Our FFO to net debt ratio decreased from 30.5% to 28.4%, but still remains substantially above 23% threshold required by S&P ratings agency for BBB+ credit rating. Net debt to EBITDA has marginally increased from 2.9 to 3 times and allows us for significant headroom up to 5 times level, where we would still feel comfortable. Also, in July, S&P annual review process has been completed and resulted in reiteration of BBB+ credit rating with a stable outlook. So to sum up, despite substantial increase in net working capital, our leverage metrics remain healthy and makes us well positioned for delivering our growth targets. Finally, as a result of our solid performance over the first half of 2022, we updated full year adjusted EBITDA guidance. We now expect our 2022 adjusted EBITDA to be in the range of 360 to 420 million euros, up from previous 320 to 360 million euros, which represents almost 15% increase for the midpoint of the range. This revision is driven by higher than expected performance of our green generation segment during the course of the reporting period. And with that, I hand over to Darius to conclude our results presentation.
Thank you, Jonas. Let me now highlight you the key points from our first half year of the 2022 results call. Ignitis Group adjusted EBITDA reached 206.5 million euros and was driven by green generation, which result accounted for almost 60% of group's total adjusted EBITDA. Green generation segment results significantly increased as a result of launch of Pomerania wind farm in Poland and better results of our operating assets. However, the group's adjusted EBITDA was partially offset by customers and solutions, which suffered losses of 4.7 million euros as a result of high natural gas inventory and growth of regulatory debt. In addition to that, due to the extreme situation in energy markets, our net working capital increased by almost 330 million euros in first half of 2022, which resulted in significant negative free cash flow and increase in net debt. Despite that, due to a better than expected green generation performance, we now expect our full year of 2022 adjusted EBITDA to be within range of 360 to 420 million euros. Also, our investments in renewables allow us to continue paying out dividends according to the dividend policy. Thus, we propose to pay a dividend of 62.4 euro cents per share for the first half of the year. To ensure further growth, we added around 750 megawatts to our green generation projects portfolio since the end of 2021, driven by expansion of our greenfield operation. So with that, thank you for joining us and listening to us today, and now we are ready for the questions.
So, as Darius mentioned, this concludes our management presentation, and we are open now for questions. Operator, handing over to you.
Thank you. We will now begin the question and answer session. If you wish to ask a question via the audio, please slowly press star 1 and then 1 on your telephone and wait for your name to be announced. Alternatively, please use the question box available on your webcast page to submit your questions. Once again, if you're on the phone line, it's star 1 and then 1 on your telephone. Thank you.
As we are waiting questions from the line, we will kick off with the ones received in advance. So the first question is, what is the current split between Ignitis Group ordinary registered shares and GDRs, excluding the state-owned share?
Okay, so the proportion of GDRs versus shares is equal to 35.4% for GDRs and 64.6% for shares. And for your information, we disclose that information in our interim report.
Our next question is, what is the current state of Vilnius HP biomass unit? Are there any changes in the first generation and COD dates?
Vilnius HP biomass unit construction works are on track with no changes since Q1 2022. As communicated previously, we expect to generate first energy in Q4 this year and COD to take place in Q2 in the next year.
Another question on green generation development. Ignitis Group has recently announced the reservation of 255 megawatts capacity for solar power plant project in Jonava region. However, has the 2 gigawatt solar capacity quote, which has been already exceeded? Did this project fit into the quote or did it exceed it? What will the exceeded quote mean for this and other projects developed by Ignitis Group? Does it mean that the 4 gigawatt installed capacity target may not be reached by 2030 and the greenfield projects developed by Ignitis Group in Lithuania may be stopped? Maybe other markets will be in your attention.
Yeah, so in short, National Energy Regulatory Council is currently evaluating all letter of intents signed between TSO and developers to analyze their viability. In our case, independently of the outcome, we are confident with our 4 gigawatt target by 2030.
Next question is, are there any signs that indicate potential amendments of the dividend policy by increasing or decreasing dividends? Will you ensure the continuity of the dividend policy? Will the dividends be paid out for the first half of 2022?
We do not foresee any changes regarding our dividend policy. We remain strongly committed to our dividend policy. It is illustrated by the fact that we kept our commitment and paid the dividends according to the policy, both during global pandemic and now during the war in Ukraine.
Thank you, Darius. Next question. What is the current situation in Mažeikiai wind farm project development? Will it be launched on time?
Yes, so Mažeikiai wind farm construction works are on track, and as communicated previously, we expect COD to take place in Q1 of 2023. So no changes there.
One more question on green generation project development. Is the 80 megawatt solar project in Poland on track? What will be the predominant revenue model for selling the energy generated by these projects? CFD, PPA, or merchant?
So Polish solar portfolio 2 development works are on track. Again, as communicated previously, we expect COD to take place this year for some capacity and larger part in 2023. As portfolio is being developed in small parts, some of the projects already have secured CFD tariff. But under current market environment, the remaining, the most of the projects should operate under the combination of PPAs and merchant basis. Also, please bear in mind that the agreement with the developer is for up to 80 megawatts.
Next question. What is the status of the 50 megawatt Polish solar wind farm? Is it on track? Are you planning to postpone the support schemes and start selling energy in the market or through PPAs instead, similarly as with the Pomerania wind farm in Poland?
Yes. So in terms of Silesia wind farms, it reached the construction phase in July. So we started the actual works on site. And in terms of offtake structure, no decisions have been taken as of now, and we will make those decisions closer to the beginning of operations.
Another question on green generation projects. What is the status of this 160 megawatt project in Latvia? What are their expected CODs?
Latvian onshore wind farm is currently in active development phase and on track with no changes as of now. And COD, as communicated previously, is expected to take place between 2025 and 2027.
One more question. How did the green generation greenfield portfolio changed? In the report on 4th of July, it was 650 megawatts.
Yeah, we made quite a good progress on greenfield portfolio, and it increased by around 730 megawatts in 2022, and now stands at around 900 megawatts.
Thank you, Jonas. One more question. The constantly increasing gas and electricity prices have far exceeded the estimated price of regulated services calculated by the regulator. How much arrears have been accumulated from the public electricity supply? How much from the gas supply? What part of it will be covered by the state budget?
So at the end of first half of 2022, we had accumulated a total for electricity and gas of 369 million euros, and this is for the period throughout 2021 and 2022 first half. The state budget initially included 365 million euro compensation, so effectively 99% of the accumulated amount will be covered this year.
Another question on customers and solutions segment. Does the independent electricity and gas supply carries a loss for Ignitis Group, or does it earn profit? What are the 6-month numbers of independent supply to private customers, and what are the numbers of the supply to business customers?
As indicated during results presentation, during the first half of 2022, customers and solutions segment suffered losses of 4.7 million euros on adjusted EBITDA level. And yet the losses have been mainly driven by independent electricity supply.
Next question. Where and how effectively hedged are the electricity and gas supply transactions? Is it true that hedging occurs mostly outside the Lithuanian market, for example, in the Finnish market, and with market prices in different markets changing at a different rate, with Lithuanian market prices increasing more significantly? Significant losses are experienced, even from the hedged transactions?
Currently, more than 95% of fixed contracts are hedged. And historically, you are right, significant part of fixed electricity contracts were hedged in Finnish price zone, which in the recent years have diverged from Lithuanian price zone. Having that in mind, in 2021 we have terminated the hedging in Finnish price zone. Therefore, only residual amounts from historical hedging transactions remain.
Next question. What share of Perlas Energia's customers does Ignitis expects to take over? Can you feel an increased flow of new contract inquiries?
Yes, we do feel an increased flow and expect to attract similar level of new customers as during the first and second rounds of the market liberalization, which is around 60 to 70% of the market share.
Another question on Vilnius HP biomass unit development. The Arbitration Institute of the Stockholm Chamber of Commerce made a favorable ruling in the legal dispute between a Polish company Rafako and a subsidiary of Ignitis Group, Vilnius Kogeneracinė Jėgainė, regarding the contract concluded in 2016. Can we expect in the light of this to recover damages incurred by the group due to the failure to complete the construction on time? What is the size of the claim Ignitis Group is planning to launch against Rafako? Was the performance of the contract ensured and Ignitis Group can claim the reimbursement of damages from the insurance provider? Will the other parties to the contract, subcontractors for example, be obligated to reimburse damages together with Rafako?
As arbitration process is confidential, apart from the beneficial to us decision, which we disclosed, we are not able to share any further details at the moment.
Thank you, Darius. Next question. What is the status and the launch date of the Kruonis 5th unit? Are you considering the development of other units, at least a 6th one? With growing green generation, which is fairly unstable, maybe the expansion of Kruonis would be promising in the future.
Kruonis expansion works are on track with no changes. Currently, public procurement procedures for acquisition of engineer services are undergoing. As communicated previously, we expect COD to take place in 2025. On the development of further units, currently we are focusing on 5th unit development and construction as per timeline indicated.
Our next question is, how do you assess the degree of political risk to the company's development and how this may affect the group's future performance? What other decisions could be taken to depoliticize the management of the company and the ability of politicians to interfere in the management?
We do assess political risk as minimal, as we as the publicly listed company have very strong corporate governance framework and practices with independent supervisory board with independent chairman, and shareholders supervisory board and management board have very clearly separated authorities and responsibilities. So we do not see any need for further improvements in this area.
Thank you, Darius. The next question. You mentioned net debt increased to 1.2 billion euros. What debt level does management consider sustainable, and what actions are you taking to limit its growth?
Yeah. So in terms of net debt levels, we have clearly stated in our strategy that we intend to keep the level below 5 times net debt to EBITDA. Of course, majority of that debt should come from infrastructure investments rather than working capital financing. And in terms of actions, which we're doing right now, is precisely that. We are focusing on measures on limiting the working capital increase to the extent possible in such a high energy price environment.
Next question is as following. When do you expect customer services segment to turn profitable?
We do expect all our segments to be profitable. So even though we don't expect large profits in this segment, we do expect it to be profitable already starting next year.
Thank you, Jonas. Our next question is, what is the net debt guidance for the end of year 2022?
We don't provide the guidance for net debt. However, some increase might be expected in the second half.
Next question. Is a further net working capital increase expected in Q3 2022, or compensation mechanism is expected to cover it?
Yeah. So naturally, with the energy price forecast which we are seeing, the further net working capital increase is likely in the upcoming quarter. And simultaneously, at the same time, at least part of that increase will be compensated through compensation mechanism, which is already in place.
Thank you, Jonas. Our next question. Quite a wide guided EBITDA range for the year. Could you please elaborate? What makes the range so wide?
Well, I think the answer here is very straightforward. It's the volatility in the energy market.
Our next question. At what ballpark level do you see the net working capital and net debt by the end of this year?
Again, as mentioned previously, we don't provide guidance for net working capital and net debt at this stage.
The next question. Could you please indicate the share of PPA agreements in total plant volumes and in green generation segment? Average price in PPAs, duration?
Yeah. So maybe some the general trend which we are seeing right now and which we are utilizing in our own offtake structures is that for the shorter end we are trying to keep as much volume on the merchant basis as possible. So you can see that as an example in our Pomerania wind farm, and the remaining periods are covered under the PPA, which is usually a long-term PPA of 10 to 15 years. In terms of prices, but this is quite a sensitive information, so we will not disclose that.
Our next question. Can you explain the year-on-year drop in adjusted EBITDA margin in Q2 2022? A drop from 23.3% to 13.3%.
Yeah. So the drop in EBITDA margin again is very the reason behind it is quite straightforward. As energy prices increased, so have increased our customers and solutions business revenue, which is a very low margin business. Therefore, EBITDA margin of the group has decreased as well.
Thank you, Jonas. Our next question. Any discussion on behalf of the government in regard for electricity price caps?
Lithuania windfall taxes would not help due to the relatively low amount of energy generated locally. Therefore, government employs different model while subsidizing and use their customer low amount of energy generated locally. Therefore, government employs different model while subsidizing and use their customer prices for natural gas and electricity with direct subsidies from the state budget.
Thank you, Darius. Our next question is, if I understand correctly, the Pomerania wind farm will sell generated electricity based on the market price during 2022 to 2023, while previously it was planned to sell it on a fixed CFD tariff, correct?
Yes, that is correct. The ratio between market sales and sales under CFD mechanism currently is roughly 80-20. So 80% of the volumes generated go in the merchant market and 20% under CFD scheme.
Thank you, Jonas. As we have no further questions, let us conclude our earnings call. Thank you for listening once again. Should you have any questions, please do contact our investor relations team. Thank you and have a great day.